China's economy, once the powerhouse of global growth, is now facing a significant slowdown. What's behind this shift? Let's break it down. Remember to subscribe to this YouTube channel to always keep updated. You can also like this video and send us your views below. First up, the real estate crisis. Property developers are struggling under massive debt, leading to unfinished projects and plummeting home sales. This has not only affected the housing market, but also consumer confidence. People are hesitant to spend when their biggest investment feels shaky. Next, let's talk about the manufacturing sector. China has long been the world's factory, but rising labor costs and stricter environmental regulations are pushing some companies to relocate. This shift means fewer jobs and less economic activity at home. The pandemic also disrupted supply chains, and while they're recovering, the global demand for cheap goods is changing. Then there's the aging population. With a declining birth rate and a growing elderly demographic, China faces a shrinking workforce. This demographic shift puts pressure on social services and reduces economic productivity. Fewer workers mean less innovation and slower growth. Trade tensions with the U.S. have also played a role. Tariffs and sanctions have made it harder for Chinese companies to compete globally. The tech sector in particular has felt the pinch, with restrictions on access to advanced technology. This has stifled innovation and limited growth potential. Additionally, the government's strict zero-COVID policy has had lasting effects. While it aimed to control the virus, it also led to lockdowns that crippled businesses and disrupted daily life. As the world moves on, China is still grappling with the economic fallout from these measures. Consumer spending, a crucial driver of any economy, has also taken a hit. Many households are saving more, worried about job security and economic stability. This cautious approach means less money flowing into businesses, further slowing growth. The tech industry, once a beacon of hope for China's economy, is facing its own challenges. Increased regulation and crackdowns on big tech companies have created uncertainty. Investors are wary, and innovation is stalling as companies navigate this new landscape. Moreover, the global economic environment is shifting. Inflation and rising interest rates in other countries are impacting demand for Chinese exports. As consumers tighten their belts worldwide, China's export-driven economy feels the strain. Lastly, let's not forget about environmental concerns. China is under pressure to reduce carbon emissions and transition to greener energy sources. While this is a necessary step for the planet, it also requires significant investment and can slow down traditional industries in the short term. In summary, China's economic slowdown is a complex issue with multiple factors at play. The real estate crisis, demographic shifts, trade tensions, and the aftermath of COVID-19 are all contributing to a challenging landscape. As the world watches, the future of China's economy remains uncertain. But one thing is clear: adapting to these changes will be crucial for recovery. The path forward will require innovation, flexibility, and a willingness to embrace new economic realities. As China navigates this transition, the global economy will be watching closely, hoping for a rebound that could benefit everyone. In conclusion, while the challenges are significant, they also present opportunities for growth and transformation. With the right strategies in place, China could emerge stronger and more resilient, ready to take on the future. The world is changing, and so is China's role in it. The next few years will be critical in determining how this economic giant adapts and evolves in a rapidly shifting landscape. Stay tuned as the story of China's economy continues to unfold, revealing new twists and turns that could reshape the global economic landscape for years to come.